Hey everybody, happy Friday. Chris Cheatham here from CMG. It's my first ever lending video. I know I've always made these stupid music videos, but hey, this is a question that all my customers are asking me right now. I just thought I'd make a video because so many of my customers are also friends on social media. So the Federal Reserve last week lowered short-term interest rates for the first time this year. Why did mortgage rates go up? And the answer is simple. First, to think about the Federal Reserve, it's short-term interest rates. It's not actually mortgage rates that they lower or raise, and they only meet once every 6 weeks. So jobs and inflation are the two things that usually affect that rate. Typically speaking, if jobs or inflation are up, then usually the Federal Reserve will tick the rates up and vice versa. But the one thing that lenders tend to look at is the 10-year Treasury bond. Now check this out. The 10-year Treasury bond is where those same investors that might invest in 30-year mortgages, they can invest in the U.S. government, and that's no risk because it's the government, and it's got a very low yield. So the U.S. Treasury bond, the 10-year Treasury bond, usually hovers around 4%. That particular asset to look at, whatever you want to call it, would be what directly can influence the 30-year mortgage market, because those same investors can take that money and instead of investing in the government, they can invest in 30-year mortgages, which is going to have much higher risk and a higher yield. So that kind of moves directly. Anyways, saying all that, the real thing to do is to talk to your lender. I'm a lender at CMG. I emailed all my customers, I think it was the 8th, 9th, and the 10th, which is when the rates actually took a drop for us. Lenders, they know about the Federal Reserve, they know about the job market, they know about the 10-year Treasury bond, inflation. They put all this together and they race to see who can get the lowest rate quickest. So for us, that window opened on Monday, I think it was September 8th. And if you were one of my customers, I'm sure you got an email or a text message from me. And most people decided to wait. They said, hey, I'm going to wait until next week when the Federal Reserve comes out on the 17th and lowers rates. Well, what happened is lenders had already baked that in 8-10 days before. And by the time the actual date came on the 17th, when the feds dropped the rates, the actual mortgage rates, which are driven by the market because of the 10-year Treasury bond, not once every 6 weeks, but something that comes out every day, and like a stock trades the 10-year Treasury bond. Because of that, the rates had actually escalated by the time they got to the 17th. So the trick to this, the easy thing for you, stay in touch with your lender. If you're thinking about refinancing or purchasing, reach out to me. I'm Chris Cheatham. Text me, email me, message me, whatever. And I can put you on a list. I got a mailing list that comes out every Monday that kind of, gives the volatility of the market, what I think about it. But also, if you just want to be on like a little list of people that I call and reach out to when the rates do drop, because sometimes those windows aren't open very long, and sometimes those windows are open before the Federal Reserve meets because they only meet once every 6 weeks. The good news is they've already announced that twice this year, and we're already in September, almost October, they're going to lower rates again. So these windows should pop up again. Hit me up. Let me know. I'll let you know when they drop, and we'll see if we want to lock. Hey, y'all, have a good weekend. I hope this wasn't too sloppy, my first ever lender video, but hey, we're giving it a shot, right? See y'all. Peace.